Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark says any positive effect from the Fed rate hike was short-lived. Public banking advocate Ellen Brown on how the big banks are no friend of the people. And bankruptcy trustee Harold Saunders tells you how not to need his services. We'll speak with Ross Clark right after this.
Unbelievable harmonies, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band, Saturday, January 9th at the Alex Goulden Hall. Buy online and save at ontourtickets.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Good to be with you, Jim.
Everybody was anticipating the U.S. Fed hiking interest rates. They did, probably the smallest margin they could. Did that have a major impact, going from 0 to 0.25?
Well, actually, I heard some people even thinking an 0.1% might have been the number, but they did the quarter, which was the most broadcast number we've seen in years. It did match exactly what the T-bills had been doing since the middle of November. As we know, the Fed tends to be a follower on rates rather than a leader, and so this, thank goodness, at least matched what was built into the marketplace. It helped the first day, in the hours following the announcement. There was strength in the U.S. dollar. You saw weakness in precious metals, strength in the equity markets, but it became a roller coaster of a week. Those moves that we had in the second half of Wednesday quickly have reversed themselves in the last 2 days of the week. So we've gone from having oversold equity markets a week ago Friday to then finishing off the week with the back at the same levels that they started. We had a quadruple witching as far as options are concerned. So that's everything from futures to indices to individual stocks to individual stock futures. These quadruples tend to have volatility around them, and in this case, it was such that it pulled us back to the lows of the last few weeks.
Hasn't that been the market pattern since Black Monday, August 24th?
There are some similarities. That day we ended up with the SPDR, the SPY, trading down just below 200, which is where there was a major open interest as far as the options were concerned. And this week they managed to sell off the SPDR right down to the equivalent levels, right around 200 at the close. There are some who are calling for a significant move down on Monday to be in concert with what we saw on August the 24th. If that's the case, recall back to that one, it was a quick-lived break, and the market then recovered back, and the volatility was exceptional, but it was a short-lived event.
Oil. I'm hearing so many different predictions for oil. It's got to be one of the craziest things where optimists in the oil and energy business are saying, no, we can see a quick break. Others are telling me a quick break. They could see prices down below $20 within a month or two.
You can't anticipate where the final end of the move will come from in terms of both price or time. And I know on my modeling, I have yet to see the oil market move into what I would call a capitulation mode. We have seen that in the past. We saw it in 2008. Had a number of weeks there that were into the deep oversold, and just finally when you reversed, you got your significant turn. But where we are right now, with the recovery that we had a couple of weeks ago, and now this drop, it's going to take further pressure to really create an oversold reading. If we recall back to last year, middle of December, oil continued to stay weak right through the year end and into January. The stocks, though, had the bulk of their tax selling pressure over by the middle of December. And it was interesting, as we finished off this week, the Canadian oils up pretty well on the tail end of the week. Most of them, as I look at it, up a good 2.5% to 3% on the day, when oil closed below 35 on the spot contract, now that contract expired on Friday, and the February will be the new one as of Monday. But it was the lowest price that we've seen in oil since April of 2004. I don't know that becomes a catalyst in any way, but it's a point of interest.
Could you see any wave of selling to meet taxes by the end of the year?
Well, the wave of selling, at the most you've got until the middle of next week. That's it, because you've got 3-day settlement as far as positions are concerned. But the bulk of pressure is generally seen by the time you get to the 15th to the 17th of December. That's where historically the turn of the year effect, the Santa Claus rally, typically will start to kick in. It looked as though that was starting earlier in this week, but we sold off right into the 18th. The 18th, from most of the books that I read and the work that I've done historically, is the optimum entry date, 17th, 18th. So if we get some stability next week, that would suggest that tax selling pressure is over. You then tend to have a vacuum of sell orders above, because those who are feeling that they needed to expedite their selling before year end, they finally throw in the towel and do that. And then you've got just virtually nothing in the way of sell orders above. So as soon as you get a reversal, you can get a pretty quick pop. Not necessarily a long-lived one, but enough to carry you into the first of the year.
Ross, thanks a lot for chatting with us.
It was nice to be with you, Jim.
Best of the season.
Best of the season to you.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. If you have any questions for Ross, you can email him at ross.clark@cibc.ca. Coming up next, Ellen Brown on This Week in Money.
Always consult your investment professional before making any investment decision. See singing impressionist Andre Philippe Gagnon.
And I think to myself.
In Oliver, December 29th. In Kelowna, December 30th. Buy online and save at ontourtickets.com. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Ellen Brown, California author, attorney, public speaker, political candidate, and advocate for financial reform, prominently public banking. Welcome back to This Week in Money, Ellen.
Thanks. Great to be talking to you.
The U.S. Fed hiked its rate from 0 to 0.25% earlier in the week. Did that have much of an impact, really, on the economy and on the markets?
Well, who it will impact, of course, it did not have any, well, actually it was good for the big banks, because they're the ones that have this huge amount of excess reserve. What the 0.25% reflects is the rate at which banks borrow from each other or from the Federal Reserve, and the cap before it was from 0 to 0.25%, and the average was 0.13%. So there wasn't a big demand for borrowing from each other anyway, particularly among the big banks, because they've got all these excess reserves left over, like close to $3 trillion or something left over from quantitative easing when they sold their assets to the Fed, and the Fed gave them reserves in exchange. So who it hurts is the small banks, who are actually the banks that are making the loans to homeowners and businesses, local businesses. So their rate goes up, the rate at which they have to borrow. If they run short, they're all loaned up or whatever you say, and they have to borrow some reserves. They would borrow from the big banks, which have excess reserves. So the big banks are going to make an extra 0.25%. The little banks are going to have to pay an extra 0.25%. And of course, they're going to pass that on to the consumers, which is us. And they've already announced, a number of banks have already announced that they raised their prime rate to 3.5%. So this will then be reflected in if you have a variable rate mortgage, it'll be reflected in that, or interest rates on credit cards. But what they didn't do, they raised the prime rate for the rate that they're going to be lending at, but they didn't raise what the rate that they're going to be paying depositors. And that was supposedly the reason there's been all this push for so long to raise interest rates, is that savers can't make any money just saving their money these days, so they have to get into riskier things, and that was actually supposedly the point of it in the first place. But now they're complaining, that they've destroyed the ability of pensioners to live off 5% interest from their banks, their bank deposits like they used to be able to do years ago. But anyway, it hasn't helped them. Nobody has raised the rates that they're paying the depositors. It's only helped the big banks, basically. Sort of made the Fed look like they're trying to do something.
Now, is there any way the Fed could force consumers to get more interest on their accounts?
Well, the Fed only has control over the rate at which banks borrow from each other, and they only do that by if they set a ceiling on what they will pay on on the excess reserves, then that sets the market for, if a bank can hold its excess reserves and get paid interest from the Federal Reserve, then they don't have any motive to lend it to the other banks. So that's the only thing that the Federal Reserve has control over, is the short-term rates. And they will generally, they're actually there to serve the Federal Reserve is owned by, or the 12 Federal Reserve branches are 100% owned by the commercial banks in their district. And the one that's basically in charge is the New York Fed, and obviously that's Wall Street. So Wall Street is calling the shots on this, and they make out like bandits as usual, and everybody else pays the bill. And I think there's actually a move to crush the small banks. I mean, you see they're making these regulations so difficult for the small banks that they have big banks, which they are doing in droves.
Now, what's that going to do to the consumer? If that program that they have is successful. And are they public about it? Have they ever said publicly, we're out to get the little guys?
No. Well, actually, I did see one place when they were writing Dodd-Frank. I think somebody said, some insider said that this was the goal, to make this, that it was easier to regulate a handful of big banks than a lot of little banks. So that's what they were actually trying to do, was to get the little banks to sell to the big banks. So great. It's the little banks that we need. They're the ones that service the local economy. And the big banks don't have any interest in making loans to small businesses. They can make it for the same amount of work. They could do a $1 billion hedge fund loan for the same amount of work as a $10,000 small business loan. So why should they bother? But the small banks, they're the ones that are serving the local community, and the reason they're even willing to take the risk is that they know their local community, they know the people, they know their histories, and they can take the time to. They're not just operating based on computer models where like a big bank will say, well, you don't qualify under our new stricter rules, and so no chance. But a small bank can look individually at these loans and determine who's creditworthy and who isn't. And the failure rate on loans is actually less for the small banks than for the big banks. They have a higher default rate for the big banks because their computer models aren't nearly as accurate as these local bankers who know their market.
Right. They know Joe's factory isn't doing all that well, so they won't lend him the money. The guys in New York couldn't care less about Joe.
Right. Or vice versa. They know who will pay, even though maybe they don't qualify under the computer standards. And if they don't pay, they help them. They work with them. They because they know them personally. So they're not going to just instantly impose foreclosure on them.
And what you told me, too, gives me a reason, because I heard HSBC and some other big international banks have told clients, business clients with less than $1 million worth of business, we don't want your account anymore. Is that why they're doing it? They just don't care. Well,
they've got plenty of excess reserves, and the only reason they would want these deposits is for the liquidity. But they've got plenty of liquidity because the Federal Reserve gave it to them, or, and I guess HSBC is a foreign bank, but are they a foreign bank? I think so.
Well,
but,
yeah.
So the EU is also doing quantitative easing now, and Japan has done it, so everybody's doing it, following the U.S. lead, but then the U.S. was following the Japanese lead, and the whole quantitative easing, as far as they're not doing it right. They're not actually getting money into the real economy as they're purporting to do, or as they should have been doing. So I'm not opposed to quantitative easing, but not the way they do it now.
Well, I know the big
Go ahead.
banks got bailed out, by billions and billions of dollars. Iceland was the only country that went and jailed the bankers who messed around with the system and did illegal things, and they supported people's mortgages. If there's another banking crisis, should the government help you pay your mortgage and forget about bailing out the big bank?
Well, they lent at very low interest something like $28 trillion to the big banks to bail them out. I mean, the Federal Reserve did, not counting our $700 billion that we gave them directly from tax money. That the Federal Reserve did this huge, virtually interest-free lending program to bail out the banks. So they could have done that to all those homeowners instead. They could have saved every single mortgage in the country. Well, maybe not every, but they could have gotten rid of the interest and made interest-free loans to all these people who are going under, and would have done wonderful things for the economy. But that's not they're not there to serve the economy. They're there to serve the banks. I mean, if you read the Federal Reserve Act, it's all about they can only deal with the banks. That's who they are. They're the head of the private banking system.
Ellen, what kind of reforms would you like to see to help out the little guy? And by the way, every study says the reason North America has done so well over the past 100 years is a strong consumer base. What can we do to the banking system to bring back that strong consumer base again?
Well, I of course, I'm head of the Public Banking Institute, and what we do is that we're trying to reestablish publicly owned banks. We've only got one, the Bank of North Dakota, which is a state-owned bank. So that bank works with the local banks. It doesn't compete with them. And it makes low-interest loans for students, for homeowners, for school districts, for farmers, for energy, that sort of thing. And it's working very well. And the bank is very profitable, and the state is very profitable. The state was the only bank that actually escaped the credit crisis in 2009. In Germany, they have a much more widespread public banking system, the Sparkassen system. And in Canada, the Bank of Canada at one time, right up until the mid-70s, lent directly to the government. So basically lent interest-free because the bank was owned by the government, so they got the interest back. So I think that should be revived, and I think we should do the same thing. I mean, every central bank should actually be there to provide the credit directly needed by the government or needed by. You could do it directly to the people. Ecuador has a new system where their central bank is basically the bank of the people. You can have a bank account with the central bank, which is pretty remarkable.
Isn't there a lawsuit in Canada trying to force them back to the old Bank of Canada system?
Yeah, there is. The Committee for Monetary Reform, something like that, economic reform, and they're making good progress on it. So that would be remarkable if they won. That would certainly be a game changer.
Yes, and imagine your credit card charging you less than, say, 20%.
Yeah, they're making such amazing profits on it, and it's not going back to us. That's the thing. Some people think we should just have a totally interest-free system, but that's not even necessary. If the banks were publicly owned, we the people would get the interest back in lieu of taxes. So, you could have all kinds of public infrastructure built, etc., with that interest. And the good of interest, it seems to me, is that it does kind of get a fire under you to pay the thing back. I mean, if you could borrow interest-free and just keep rolling the loans over and over, why would you ever pay it back unless the deal was that they were going to take your house if you missed a payment? But then that seems a little rude as well. I mean, it would be nicer if you could just pay a little interest. It's like on your credit card. It's like, well, I can't make it this month, but I mean, really, credit cards are interest free. It's interest free for 1 month. So So the penalty for not making the deadline is not that we're going to cut off your credit. It's that we're going to charge you interest hereafter till you pay up.
Ellen, is there a website people can go to find out more about perhaps changing the public banking system?
The Public Banking Institute website is publicbankinginstitute.org, and then my website with over 300 articles on this subject is ellenbrown.com.
Ellen, thank you very much for speaking with us, and best of the season.
Oh, thanks, and best of the season to you as well.
My guest has been Ellen Brown, a California author, attorney, public speaker, political candidate, and advocate for financial reform, prominently public banking. Coming up, bankruptcy trustee Harold Saunders next on This Week in Money.
Unbelievable harmonies, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band, Saturday, January 9th at the Alex Goulden Hall. Buy online and save at ontourtickets.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Harold Saunders. He's the president of Campbell Saunders Limited, trustee in bankruptcy. Welcome to the show, Harold.
Thank you so much for having me on.
One of the things I wanted to ask right away are, what are the myths and fallacies about bankruptcy? Is it the end of the financial world for someone?
It really isn't. It's the government of Canada set up legislation to help the unfortunate debtor, someone's owing money, to help them get back on their feet. Bankruptcy obviously is a last resort. There's so many, when someone comes in to see us, we look at all their, we try first of all to get as much information as we can as to their financial situation, how much they owe, what are their earnings, their income, whatever. And then we go through a process of elimination because there's so many ways of solving your problems. And that people don't realize. Maybe family can help. Maybe changing from a credit card to a line of credit at the bank where the interest rates aren't so high. If you really can't deal with all the high interest rates and so forth, there's a program through Credit Counseling Society if you qualify and are able to pay your debts off in full over a period of time. Then we look at an option which is a consumer proposal or a bigger proposal if necessary, depending on the extent of your debts. And where we go to the people to whom you owe money, we say, look, we can't pay you everything, but we want to pay something. If that's not possible or if they're not cooperative and they don't agree, then the bankruptcy is the last resort. But all processes help an individual have a chance to get back on their feet financially. If you've asked the question, is bankruptcy the end of the world? It hurts your credit rating. There's no question about it, because it'll be on your credit record for 6 years after your debts are forgiven, and that depends on different circumstances. But there are a lot of people who've gone through the process. They get back on their feet. They begin to manage their funds better, their income better. There's 2 counseling sessions they have to go through, and then it's off the record, generally 6 years after the discharge. So after that, it's off the record. It will affect getting credit before that, but it does give you a person a new beginning, basically, to get back on top of things.
Now, Donald Trump has declared bankruptcy 3 or 4 times, I think, and it seems he's still doing okay.
Basically, what I've heard on the news is some of his companies did what they call Chapter 11, which is a reorganization or proposal. And when anyone questions him, he says, well, that's the law. I was able to do it. I didn't break the law. And a lot of people, a lot of very big business people over the years throughout the country have had misfortunes in their businesses or their private affairs, and they've had to go through a process. But then they get back on their feet because they don't have the tons of bricks on their shoulders anymore, and they can then begin to focus and get back on their feet. And they do very well afterwards. There's no guarantee it will happen. There are consequences. It could affect, as I said earlier, your credit rating for a period of years. People may be hesitant to grant credit to you, but many people are able to get back on their feet functioning again.
Is there a difference between personal bankruptcy and corporate bankruptcy?
In law, a corporation is like a person like we are as people. And it's the same thing, the same rules. except there's a corporation doesn't get a discharge, obviously, from a bankruptcy. An individual gets a discharge, which means their debts are eligible to be forgiven within a certain period of time. But a corporation, saying the process is different because we're dealing with a company that has assets or may not have assets, but the idea is to eliminate the debts if possible, and that's the same thing with a bankruptcy. But there's a lot of different procedures that go through with a personal bankruptcy that don't apply to a corporate bankruptcy.
What are the common things that people tell you they believe happens with bankruptcy, and what really happens?
A lot of people come into us, they don't really, they're concerned about the concept of bankruptcy, and that's why just the term disturbs them. That's why it's imperative, and it's required by the superintendent of bankruptcy, that we do an assessment. We look at all the options. And then if a bankruptcy is no choice, then we explain it in detail. And which we have to do, is to, what are their duties, what are the consequences, and so forth. And generally people who I've met with over the years, they seem to understand. They don't like it. Many people wish they could just pay their debts in full or, not have the situation, but you never know what's going to cause it. I mean, it could be a failure of a business, it could be matrimonial issues, it could be many other issues, loss of a job, and there's so many issues that can cause a bankruptcy, and this way it gives them a chance to get back on their feet and function again.
I know, I think the TV ads really encourage us to overspend, and you can just use this credit card or the services of this bank to rack up more of a debt, and perhaps the whole idea of a middle-class lifestyle has been oversold. Is that one of the problems?
I think people today with the cost of living, and I'm not an expert at that, and raising a family, obviously the cost of rents are more, paying more for houses and whatever, especially in the Vancouver area. I think people are tight. And they struggle. Honest, good people just struggle to make ends meet. And yes, there's the family pressures of trying to provide for family. There are those obviously who will just misuse credit, travel a lot, and don't care, or just live it up, and then don't care about the consequences. But there's also situations of helping family. I mean, families that may be experiencing financial difficulties, helping your children, your spouse may have some health issues that are affecting income into the family. So it's a myriad of a lot of issues. Yes, people spend. It's easy to have a credit card, and when we do counseling, we tell people that when you don't have a credit card, you're dealing in cash. You measure it, and you're very careful what you do. When you just have a credit card or cards, giving the card is very simple. Then you don't realize the consequences later on. Even though using a credit card can have benefits, because if you pay it off in 30 days, then you're not charged any interest. But most people just can't do that.
A lot of people think that if you can make the interest payments, you're okay.
But it just increases. The debt's increasing. I mean, you're just carrying, there's minimal payments you have to make. That includes a little bit of principal and the interest, obviously.
Right. Is it a bad idea to just make those minimum payments?
People do it when they're desperate. It's not a good idea because your debt doesn't go away and it continues to grow. And eventually, if you don't have, it can catch up with you if it gets, overextended.
What are the warning signs that your finances are getting away from you?
Well, you just can't pay your bills on time. You begin to sell your own personal assets to keep up. You're going to family or friends for debts. You're issuing NSF checks. Creditors are beginning to harass you. Utility companies have threatened or have cut off service. These are the signs, big signs that, wait, there's something wrong here. And, you're getting harassing calls from your creditors, and you just can't do anything about it.
Can creditors call you at work?
They're not supposed to. You tell them not to do it, but unfortunately, some of them continue to do it, I've been told.
Right. Is that against the law?
There is a credit. There are regulations in British Columbia that say, that if you tell them not to do it, they're not supposed to do it. But generally, I've been told by people, it doesn't stop people, especially the calls are coming from another province or whatever.
Or from the States.
Or from the States in particular.
So now we know what the warning signs are. What are the things a person should be doing so they don't get into a state like that? What are some of the common pitfalls, and what are the best ways to stay out of them?
Well, obviously, the simple words are live within your means. And in order to do that, I think it's to somehow do a kind of a monthly budget if you can do it. Most people don't, but you know what the family income is, and then you know what's left over to spend. And the first thing you do is you take away the necessities, your needs, that's food, clothing, housing. These are things you can't survive without. Then, if you have covered all of that, then you're left with your discretionary spending, which is, extra spending, and that's where you got to make choices. Short-term, medium-term, long-term. Can I afford to get a new car? Can I afford to buy a new TV? And that's when you have to see, you got to plan that. It's easier said than done, because when you have the pressures of raising a family or other issues, you just can't do it. Or if you're self-employed in business or whatever, it's very, very hard. You're struggling. You can be struggling to make ends meet.
We're speaking with bankruptcy trustee Harold Saunders. The TV show Till Debt Do Us Part really seems to highlight a lot of these problems where people don't know how to separate necessities and needs and wants.
That's right. And I've been told it's a good show, and that's the trouble. People basically have difficulty doing that. We try, in our counseling sessions or whatever, to try to explain to people, give them an idea, some tips as to what they can do to try to manage their expectations.
Right. One of the shows I just saw recently, they were spending $800 a month on restaurant meals.
That's right. It's very expensive. And try to, people, that's where it comes to planning. Can I really afford to go to restaurants? Do I take work, if I'm going to work, do I take lunch to work, or do I go and eat out in restaurants? And it's very, very, that's where it's important to balance it.
Sure. And just 2 trips to Starbucks every day.
That's exactly it. Do I have to have a cafe latte, or can I just have a straight coffee?
Or how about bring a thermos?
That's right. And a lot of people are doing that. A lot of people are doing that.
And the difference at the end of the month can be hundreds of dollars, right?
That's exactly right. And then you also have the other problems, which are hard, which are people smoke. It can be very expensive to do that. People drink at times. Some are just small social drinkers. Others, will have higher alcohol bills. These are the different things that affect, at the end of the day, it affects what's left over to live to live reasonably.
Is bankruptcy seasonal? Do you see a lot of people coming in after Christmas saying, whoops, I've gone over the line?
We see a lot of that, definitely. If people are away in the summer months on vacations, obviously it slows down a bit. But it's through the whole year. Financial difficulties people are having difficulty for so many reasons why they might be. So we're seeing people coming to see us throughout the whole year.
What about when you have a huge downturn in a certain industry like Alberta's oil patch? Does that really start triggering a lot of alarm bells?
It does. People woke up one morning to realize they didn't have jobs. It wasn't their fault. They were working hard. Welders, for example, working in the oil patch. They had good jobs. They were managing, whatever, and all of a sudden, there's no more income. They've got to go on EI, employment insurance. Many of them have come back to BC to try and find jobs. I had someone in earlier today tell me some are going back to Alberta. I don't know the extent of it. But, this is how the economy works, especially in a resource province like Alberta, where things are going wonderfully, and all of a sudden there's a drop in oil prices.
So people should be putting together a budget, taking a look at what they're spending every month on things, and is that necessary? And little things too, like turning off lights that you don't need.
That's
Personally, right. I've halved my hydro bill by just making sure if I'm not in that room, then why do I need a light on there?
Absolutely. It all adds up. And we also tell people, if they can let's say 10% of your income, if you're able to do, put it away. Save it every month. Because you never know. Eventually, if you can have 3 months of savings put away, that takes time. All of this takes time. It doesn't happen overnight. But if you can do that, just have a nest egg. Put wisely to plan your retirement. Put monies into RRSPs or RESPs if you could for your children, that they will have an education, good education later on. Tax-free savings accounts if they have the ability to do it. But it's all a matter of discipline, of being able to plan and to do what you have to do. But you never know. One member of the family can lose their job.
Do people look at their credit cards as free money? Or not free, but very easy?
I think they just don't realize there's so much involved in the day-to-day issues of life that many people just use it as a convenience, not as or as a necessity, not a convenience. Credit is good if you use it right. If it's not, then you have problems.
Do the banks just wait for the day that you declare bankruptcy or are in big trouble so they can swoop in and take your assets?
Banks are getting a bit proactive. Obviously, they try their best to encourage people to pay their debts, and sometimes they give it over to collection agency. And the collection, they can go to court, they can get judgments, they can garnish your income to get a judgment. They can even garnish a bank account. Prior to judgment, they can, if you got money in your bank and you owe your Visa account or whatever, they can offset. In other words, take money and scoop it, because they consider it to be all one unit. What
if somebody's property is in the name of another person, say their wife or their husband? Does that protect them?
Yeah, if it's in somebody else's name, obviously, no, they can't do anything, but they can check to see, well, did someone transfer property 30, 40 days ago, just get property out of their name? And even if they go bankrupt, these are one of the things we have to look at, and the questions are asked when, did you transfer any assets the last 5 years? And just to see what really happened.
What are some of the common things that your company can do to help a person to make sure they don't go bankrupt? Should they, first of all, if they have concerns about their financial situation, should they talk to a trustee like you?
Absolutely. Because what we do is we go over, we assess their situation. As I said at the very beginning, using our services, our firm may not be the right option. As I said earlier, there's many other ways of solving it. As I said, can family or friends help? Can you adjust your budgeting and begin paying debts off yourself? Can you even privately negotiate, although sometimes it's quite difficult to do that with creditors? I mentioned earlier the Credit Counseling Society. If you can pay your debts in full, and so you don't have to go through bettering your credit record. But then there's a consumer proposal, which is a settlement. You're trying to compromise the debts you owe. And then obviously there is the bankruptcy is the last option.
Is it expensive to use a bankruptcy trustee?
Not really. It depends on the circumstances. It's always in paying your debts in full. When we meet with people, we don't charge them the first time. When we're trying to find out what's the best options for them, and they make that decision themselves, it's a free interview. Then we look to say, okay, if it's a proposal, what will the monthly payments be? If it's a bankruptcy, depending on extent of earnings or assets, this is what it'll be, and so forth. I love when people make an ultimate decision. I like to make them as best as possible to make an educated decision. It's a big decision for people to make, and you have to care for the individual you're meeting with to make sure that that's how I get fun out of it eventually, is that if I can see people turn their lives around, maybe I've done something right. There's always going to be scoundrels. There's always going to be people trying to beat the system and have a lot of other issues. But if people can turn themselves around, that's the best reward I see coming out of it.
So it's not all doom and gloom?
It's not all doom and gloom. For some, it may be their obvious to honor their pride's at stake. But again, there may be issues. There may be transfers of assets. There may be big debt to the tax department, CRA, and what are the reasons behind it? And they can get very proactive. They can oppose the discharge. That's when debts are eligible to be forgiven and say, look, you should pay something. And of course, they're being pretty strict now on income tax debtors because they're saying, wait a minute, we all pay our taxes, but if, again, they look at the circumstances, they look at the extent of the debt, what caused it, and then, and then if what we try to do, if see whether we can come to an understanding, we try to do with CRA if we can, not sometimes complex issues, lawyers have to get involved, is to go and say to the court, okay, here's what we've agreed, and the courts look at it. As long as it's fair, they generally go along with it.
Right, because some money from a creditor is better than none.
But the courts look strongly right now, at least here in BC, about an income tax. They don't look at it that way. They say, well, let's say, someone has a $200,000 or $180,000 tax debt. And then, well, how much of it is interest and penalties? How much is it the actual principal owing? Sometimes interest and penalties can be significant. And then there's something called income tax-driven bankruptcy, which is if debts are over $200,000, they price 75% of over 75% of the debts. Then we're obligated when it comes time to have for discharge or have the debts forgiven, we're obligated to go to court and say to the court, here's the facts. But we tell people the key is in coming into a trustee is we look at the situation. And I don't like people to have too many surprises. I try to say, look, here's where I see potential problems down the road. This is what we're going to have to deal with.
Are people accepting of that? Or is there a lot of denial?
There's always denial. People are embarrassed. There is denial, but most people realize and they want to move on with their lives. They just need to get a new beginning. And that's what people are looking for. They need to they have families generally, sometimes they don't. They just want to get moving on with their lives.
What about the old trick of, say, taking your credit card and putting it in your freezer in a block of ice? Does that slow anybody down from spending?
No, well, sometimes people cut out the credit cards. They don't want to deal with it anymore. They realize they're just getting over their heads. But then they still have to deal with the debt that they've incurred so far. So one thing to stop spending is another thing, how am I going to deal with what I have? And that's where the options come in.
What do you think has been the best result you've ever had? Does anything stand out?
It stands out when a lot of people come back and they're doing fine. They say thank you so much, and it happens quite a bit of times where I can't just pick anyone as an individual or whatever. Or if you're involved, even in businesses that have whether they be bankrupt or they do a proposal or whatever, that they're able to straighten out their financial affairs and get back on their feet. We see a lot of that. It's hard to identify any one particular case, but I see a lot of that where people they're happy. They've got back on their feet. The pressure is no longer there. The calls from creditors are pretty stressful, and they now know they can get a new beginning.
Yeah, not having those phone calls every day or 5 times a day.
That's exactly it. And, with threats or, judgments or sometimes their incomes are being garnished. And, bankruptcy or a proposal will stop the garnishment. There's a stay of proceedings. I call it a Star Wars wall that comes down between them and the creditors.
Harold, how can people find out more about Campbell Saunders?
We have our website. We're just, in fact, redesigning it. It'll be coming out in a few months, and they can call us. We have 2 offices. We have Vancouver. Our telephone number there is 604-915-5550, or they can call me here in Richmond, 604-821-9882.
And the website?
CS Campbell Saunders, VAN.com.
Harold, thank you very much for chatting with us.
Thank you so much for having me on.
My guest has been Harold Saunders, president of Campbell Saunders Limited, trustee in bankruptcy. That wraps up our show for this week. Thanks to our guests, Ross Clark, Ellen Brown, and Harold Saunders, and thank you for listening. Comments or questions for This Week in Money can be emailed to info@howstreet.com. I'm Jim Goddard. Best of the season. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.